And we are officially live, broadcasting only on onedealaway.com/live. This is Money Matters. My name is Nev, and today is Tuesday, September 15th. Can you believe it? We are halfway through the month of September. It's gotten cooler, so the hoodie is back on out. Check it out. What do you think? Right? All right, so the hoodie's on. T-shirts are off. Well, I don't know that are off. They're still on, but they're just underneath the hoodies. We are all getting for winter because winter is coming. And with winter coming, we do have additional pieces that are also rolling out. I know you're thinking Macy's Parade, but from what I hear, that puppy has actually been canceled. Can you believe it? Can you believe they canceled Macy's Parade? That's right. Everything is canceled. We're canceling Thanksgiving. We're canceling Christmas. We're canceling school. We are canceling the year and apparently canceling your money as well. And today we're actually going to talk about all of those things and how liquidity or the lack thereof affects your money. Now, I know when Fed prints money, you and I don't get it, right? It goes over to the banks. The banks are supposed to loan it. And then when it's being loaned into the existence, that's when we create the new money. And then if it starts churning around, that's when we start seeing potential inflation pick up. But what have we seen? Well, liquidity has picked on. They went out there, gave it to the banks. The banks didn't loan it. Well, they were loaning it, just not as much as typically would be. You and I are not quite getting our money. We're not getting unemployment. We're not getting stimulus checks. We're not getting stimulated in any way other than rubbed the wrong way, causing us to get out on the streets and start destroying everything in sight because anger is a real thing. And people get very, very angry when you take their rights, their liberties, their money, their food, their ability to actually be good, prosperous individuals. And that's what we're experiencing right now. So we're going to be talking about liquidity and what's actually been going on. We're going to be talking about what's happening with the banks are saying. So we have some reports from Citi cutting jobs, JP Morgan bringing everybody to the office, Oracle buying TikTok. Well, let's see. MicroStrategy is increasing their bets on their largest reserve. And of course, what's happening with unemployment payments and stimulus checks. All of that coming to you in a moment. Let's do this. All right, y'all. Good morning, good morning, good morning. Let's get started. Let's kick off this madhouse into what's happening with unemployment. So, unemployment stimulus, obviously, we know that we have, and depending who you listen to, the official number, which I think is a lie, personally speaking, is about 8% unemployment. I don't think so. I mean, depends, I guess, what you count as unemployment and employment. And how many people are you counting into your math? So sure, I'm sure that the math is correct, but I think it's heavily manipulated and it's basically a lie. I'm just putting it out there. The other reports are coming in saying that unemployment is closer to 30%. Now, I don't know if it's that high, but there's a good potential that it's somewhere in the middle. Needless to say, we're talking of tens of millions individuals who are needing this unemployment money in order to make payments for life, right? I mean, I know that CDC has banned the whole eviction piece, right? But you still owe money for that even if you're not paying it. So you got to take care of that piece. And you got to pay for food. You got to pay for heat because winter is coming for most of us. Even the people, and I know people are like, oh, well, it's easy for people in Arizona and New Mexico and it gets chilly over there. And when you go from 120 degrees down to 40, 50, even 60 degrees, people get cold. I mean, your blood thins or thickens. I'm not quite sure what it does. I think it thins. And you get colder much, much faster, right? So it's just that temperature difference. So people do need to chill and actually heat themselves. Right now they're chilling, but they do need to heat themselves and that's coming in a couple of months. So there's going to be additional costs coming in. Then, of course, you got to get all of the winter clothes and stuff if you don't have it, and that tends to be much more expensive. Winter boots cost way more than a pair of flip-flops. Just saying, right? So all of that stuff is coming in at the larger cost, larger expense, but the income is not coming in. So what is happening with unemployment? Well, there's a wave of states that is running out of, or actually has already run out of, the extra unemployment benefit as negotiations flounder. And boy, do they flounder these days. U.S. states are increasingly running out of unemployment benefits. 5 states, Arizona, Missouri, Montana, Tennessee, and Texas, have officially exhausted 6 weeks' worth of extra $300 weekly unemployment benefits under the Lost Wages Assistance Program. Another 19 states will likely distribute their last payments in the coming days, and the rest will pay the benefits retroactively in lump sum. Hold on, pause, let's talk. So there's a problem, right? We have 5 states completely run out, additional 19, so that's 24 states. That's 50% of the United States. I know it's not exactly 50%, but work with me here, right? Roughly 50% of states have exhausted their payments, so that means those 50 states won't be paying. And then there are other states who are saying, well, we're going to pay you, but it's going to be retroactive. Well, I can't live retroactively. Like, I appreciate that you're going to pay me 6 months from now, but I got to make a living between now and that 6 months. And that is a huge problem. And it's a huge problem for many people out there, not just watching this, but watching everything else, holding their breath, praying, hoping that some sort of assistance and relief will come. And here is what, let me see if I can make this a little bit bigger. Can I? Is it bigger? Oh, it is bigger. Okay, hold on. Let me make it slightly smaller. There we go. So you can see extra unemployment benefits for states beginning to run out. 15 states have started paying the extra unemployment benefits available under the president's August 8th memorandum, and 5 states have already run out of the funds under the program. And you can see the red states have run out. The green states have started paying, right? So the dark green states, you can see kind of where we are, what's going on. Here we go a little bit down here in South, and we have a couple of states over here in New England. Then we have those that are approved, so where there's more of those, approved, but they're not doing anything. Applied, okay, or sorry, applying. Well, that's Nevada is just applying right now, and then declined to apply. That's South Dakota. So South Dakota is like, we're out. We're not even playing the game. We're not even playing the game. Stop it. We are not doing it. Unfortunately, the problem is that, I know Congress is meeting and all of that stuff, and there's talks of the extra money and the stimulus, and is it coming, is it not coming? Like, where are we with that stuff? But as I will show you in a moment, there's really not much of anything happening. They are out there fighting still with one another, and the rest of us, well, we are not getting much of anything. So here is what's going on. This, you're not getting it. I don't know why they even put it there. I think they just want to tease us to say, dream on, dream on. So we do know that there's a deep division between the two sides, and of course it's an election year, so it gets even worse because everybody wants to blame everybody and make everybody look bad so that they can win, all at our cost. Not only are we paying through taxation, potential inflation, deflation, stagnation component, loss of wages, asset prices are about to start coming down as well, as we're going to talk about in the upcoming few minutes. So make sure you stay for that. But then we have this whole thing, and they can't agree on anything. They put it in. They were like, yeah, we're gonna come in with a deal, and people are like, vote yes, vote no. It's not being passed. Nothing is going on. So the Treasury Secretary Stephen Mnuchin has said it would take about a week to mobilize the first payments. Well, great. It will take a week, but how long is it going to take you to actually decide? Are you paying? Are you not paying? When the House returns next week, right? Because they're left away, so they're coming back, and so it should be next week, right? They will have 12 working days. That's it. So just under 2 weeks, 12 working days before it's scheduled to break again for election, and then it's game over. Nothing happens. The Senate has 22 working days during the current session, which started earlier this week before it breaks for the election. So, what we're basically saying is if they can't come up with something this week, next week, or week after that, hold on, what does that make it? That makes it, well, if they don't come up with something by like early October, no deal. No deal. You know, Deal or No Deal? You watched that show ever? No deal. They're going to slam that button thing. Nobody gets money. And then we sit and wait. But will we wait patiently or will people rise? That is a key question. The IRS would likely use the roughly same system for sending out second stimulus check as it did for the first time. Well, what does that mean? Well, they have all of these different groups, but one thing I did get is that the IRS will have, the IRS will have been sending the first stimulus payment from April 15th to approximately December 31st, period of 260 days. That was the first round, right? So if we follow the timeline, a second stimulus check that is authorized before the end of 2020, who knows if that's going to happen, could still be paying out funds to qualified recipients through the first half of 21. Hold up. That's right. We are canceling Thanksgiving. We're canceling Christmas. We're canceling New Year's. We're canceling a parade. Oh, by the way, did you know that Peeps are being canceled for Halloween? That's right. We're canceling Halloween as well. Hey, let's cancel everything this year. We might as well just cancel 2020 completely. But it doesn't appear that 2021 is going to be any prettier whatsoever. Wait, Nev, why are you killing my dreams, man? I am here sitting in September. I'm counting the days till 21 comes in because it's going to be New Year's and everything is going to be better, right? Right? Guys? Yeah, not so much, y'all. Not so much. Problem. Yet another problem. Liquidity boom fueled by record stimulus has ended and equity market is vulnerable. So, we're not getting payments. We're canceling every single holiday. We've canceled your family and ability to go visit them already earlier this year. We've canceled your ability to fly and travel. We've canceled your ability to make money. I mean, Lord knows it's a cancel everything thing, right? The liquidity boom fueled from record fiscal and monetary stimulus has disappeared. We're canceling that too. Equity market has the biggest beneficiary has was biggest beneficiary and it should show the earliest hit and also bear the brunt of abrupt reversal in liquidity. So we've already talked about kind of what happens, right? And so you do understand that what ends up happening is that you do have, when, let me see if I can do the little bit of writing here for you. Yes, little bit of white space here. So when we have, when we have, let's talk about it together. So when we have basically the Fed saying that they are putting out their $1 trillion, for example, right? Well, that $1 trillion does not go to you and me, right? That is not what happens. It actually goes to the banks. That's right. This is my version of a bank, right? It looks like it, doesn't it? And then banks are supposed to lend that out to businesses, to people, right? To all these different things for different stuff. Well, lending piece of this whole thing is what's not necessarily happening. So, the banks are going out there and they're trying to deleverage the piece because they see the writing on the wall that they might be in trouble come the end of everything. So what we might be seeing is that the deeper deflationary period comes in with stronger dollar and bonds potentially being the only ones that might make sense in the very, very near term. And then after that, we could see the other stuff roll out. Now, broad money, which is M2, increased by a record of 13.6% in 3 months, ending in June, right? So June, May, and April. So those are the 3 months, and we were up. That's well over or roughly 3 times larger than the prior record 3 month increase in broad money over the past 50 years. Meaning we've never, ever, ever printed as much money and dumped it over to the banks and dumped it over as a potential towards the liquidity. Sensing the surge in liquidity, broad money, professional managers increased their exposure to equities, right? And so they saw that this is going to come. They figured out that, hey, this money has to go somewhere. And where is it going to go? Well, it's going to go towards the stocks. Normal GDP in second quarter declined a record of 9.6%. And now we see what's happening. Red line is the broad money supply, or M2. The little bluish purplish line is nominal GDP. And as you can see, they sort of like they're not exactly the same, but they're definitely in a relationship, right? Up until we kind of came in here, right? End of 2019, and then we started to see a little bit of divide, and then boom, broad money went through the roof, and nominal GDP went through the floor. They had a giant fight, but eventually they have to meet. They have to meet again. There's no going around it. Record surge in broad money and decline in nominal spending proved to be very favorable to finance. Equity markets surge, increasing more than 50%, hitting record levels in the process. However, the process is reversing. So let's pause over here. So nominal GDP, it basically means that some of the spending and stuff was declining. So money had to go somewhere. Where does it go? It goes into the assets. Well, what do the assets do when the supply remains the same and demand goes up? Well, they go up in price. But what happens when people start not getting money and liquidity coming their way, and instead of buying, they have to start selling? Well, pending the supply stays the same and demand starts pulling out, the prices have to start falling. That is what we're seeing, and that's what it appears that we likely will be seeing in the upcoming months. According to the GDP Now estimates by the Federal Reserve Bank of Atlanta, third quarter GDP is expanding over 7%. However, broad money is running less than 1.5% so far in Q3, in the third quarter. Liquidity slowdown is amplified by three consecutive monthly declines in commercial bank credit, which is bank loans to business, real estate, and consumer. And here is kind of what you can see, right? This is what we saw over here, that the record goes up, and then you see it kind of come down. It's kind of hard to see, but you can see the little gap, and you see that we are back to where we were. I don't know. I would roughly say February, March levels, right? So that was pre-everything insanity. The sudden deceleration on broad money and credit has to mean something for finance. Since it was a big positive, it likely will be something big negative. And where is it going to hit? Well, it's going to hit in the things that have received the most in the last few months when liquidity was super, super high. And what they're saying, that's going to be the tech stocks. They're going to probably be the most vulnerable to a shortfall in liquidity. And you're hearing this from many, many people out there. Record fiscal stimulus was another driver of the liquidity boom. Second quarter boosted personal income by 3.2 trillion annualized, right? Because they're sending money to everybody and all of that stuff is happening. But all of that basically stopped at the end of July. So we've gone entire month of August. We've gone half a September, right? And things are starting to be cut even more. It's going to get worse, not better. With more than $30 billion of the $44 billion already distributed, the administration is beginning to cut off the states that were providing the additional unemployment benefit. So that is going away, and we just talked about that stuff. Consumer liquidity was boosted by $750 billion a month from April through July. By the end of September, that figure will be reduced to zero. All right, let's pause on this stuff. So what has been driving a lot of ability to kind of like pay things and like buy stuff and do all kinds of things that we were sort of doing, and of course buy into the stocks through Robinhood, that is all going away. That is all going away. We've seen a small cut, and we've already noticed the decline in things. Now we're going to see the additional piece for the unemployment, and that is going to decimate, absolutely decimate everything. And that's the reason why I'm saying they're canceling the holidays. I mean, the holiday is still going to happen, the date is still going to happen, but they're not coming in fast enough to resolve this problem. And it's a big, big problem. Consumer spending will be hurt by the abrupt removal of liquidity. Um, but the fallout won't be immediately visible, right? So it's gonna be sort of like, oh, nobody saw it coming. Well, we're seeing it coming. There's nothing you can do other than just stay out of the way. First sign of a consumer spending pullback is usually seen in weaker retail sales, but of course, we've already seen weaker retail sales, and all of that has been decimated anyways. So the fallout in retail spending is likely to be a fourth quarter event. Failure by Congress to provide additional financial support to people will hurt, as would a correction in the equity market emanating from the reversal in liquidity flows. So, what they're basically saying is that you could see there's going to be a few different things. Not only is your money, that your income that you need for daily activities and payments and that kind of stuff, going to basically dry up and go away, but then the stock market has a very good potential of reversing trend of up to go down. I know we had a little bit of the thing, and they were calling it a head fake or the bull or bear fake or whatever the heck they called it, because it went down, it's starting to go back up. But this volatility, where like it kind of goes up and it jerks back down and stuff, is the part where many people, many intelligent people, are kind of getting out of this whole thing. And so my heart really goes out to those that are just trying to figure out, how do I preserve my wealth in my 401k or whatever limited stocks. And I think when this piece hits, we're going to be seeing a whole lot more uncertainty coming our way. And then of course, all of the I mean, like I said, I think the Fed is going to have to continue the liquidity, and I think they're going to have to start sending regular payments to people if we're to get out of this mess. The other option is everything crashes. And so, like I've said, is it possible that right now, because of the elections, that they are literally doing stuff and manipulating things in the background, trying to basically destroy one another so that the other party can remain on the top, right? Yes, absolutely possible. Is that, going to hurt everybody? Guaranteed hurting everybody. But they're playing with their political games. And, when that happens, you and I, the people, end up suffering. And it's really bad, because they should be working for us. Instead, well, as I always say, politicians only work for themselves. They be everybody else. And those that stay in their way, well, good luck to them. So, if you are relying on the government, is what I'm saying, don't. Don't. It's not a reliable force. It doesn't really seem to work. And the only thing that you are doing is just putting yourself at a higher risk of, what's going on. So, you don't want to do that to yourself. I mean, you can. Do as you will. It just seems to be a bit silly, in my humble opinion. For me, I believe you need to take care of yourself and not rely on them, because relying on them, you're asking for a world of hurt. But talking about them and talking about us, I do have a couple of reports coming from biggest of the banks. One of them is Citibank. So Citibank is starting to do job cuts yet one more time. That's right, they're cutting their jobs. Hold on. Let me adjust this just slightly so you can actually see it. And, 6 months after Citi and all other banks vowed they would not pursue banker layoffs during the pandemic appears to have ended in the banks, because the bank will resume job cuts starting this week. That's right, they're going to be cutting jobs. They made an announcement. They've also made some boo-boos and stuff, and their stocks are plummeting, and they're about to implode, and so there's a host of issues happening with the banks, but it said that it would fire less than 1% of the total workforce. Well, that doesn't sound like a whole lot of jobs, but Citi currently employs around 204,000 workers, so 1% is, what? 2,000 employees, not a huge number, but it's very, very huge to those 2,000 individuals. And when you cut 1%, then you go in and you move on to the 5%. And when you move on to the 5%, then you go to the 10 and 20%. So I do believe that this is going to continue, and this is not just the end. Rather, it's only a beginning. They're testing to see if we say we're cutting 1% and we cut off the 1%, what happens to profitability and our stock price. And when that ends up being not so affected, because it's not so affected, then they're going to start cutting more. That's just my personal opinion. I have no clue if that's going to happen. Firms are now pushing to cut costs as the pandemic has dragged on, threatening lenders with higher credit costs and wimping revenue growth. And of course, that is what we're seeing. We're seeing that everywhere, all over the place. And it's not just the banks, but banks are the next piece. And we talked about it, and we continue to talk about it. That first, in any sort of crisis, you see the lowest paid jobs being eliminated first. Then you start going up the ranks and start eliminating the higher paying jobs. So we're seeing tech firms, we're seeing banks, so we're seeing higher paying jobs that are being cut. Well, you might sit there and say, that's right, eliminate them as well, because if a lower paid employee got eliminated, why not the higher paid employee? Well, the problem is that the higher paying employee are the ones who are also, tend to travel a bit more, which I know we've canceled that, so there goes that. They tend to shop a bit more. Well, that's not happening. We were canceling that, going online, but we're not doing that anymore. They tend to invest a bit more through 401ks and even individually. So that is not going to be happening. So that's going to stop putting money into. And we're seeing reports that the companies are actually stopping or pausing. Some of them are completely eliminating the 401k contributions. So that means that less money is going into the contributions. When less money goes into the contributions, less money goes into the stock market. When less money goes into the stock market, where does the market go? Only way, right? So it goes down. So that's where the problem kind of comes in. On top of that, when folks who have 401k but run out of all of the money, what do? Well, they start either borrowing against it or taking it completely out. Then be all of the penalties that they have to pay, but under certain circumstances you don't even have to pay the penalties, so they are kind of going through and doing that stuff as well, which means more money is being pulled out of the market, which is another downward pressure. So we're seeing a lot of downward pressures when it comes to the stocks, right? And that's kind of highly problematic piece that I am looking at and saying this does not look good. Now, this is not financial advice. Nothing I say on Money Matters or anywhere else is or should be used as financial advice, or, you making decisions based off of what in the world I'm saying. Hey, I'm just a random guy broadcasting on my own channel and posting the videos on YouTube and elsewhere. But, you got to do you. You got to do you. You got to make your own decisions. And if you need financial advice, well, find a financial advisor that you can trust, or better yet, spend a little bit of time and maybe even money, but time to learn about money so that you don't have to rely on a third party, because most of the financial advisors just have a fancy name of financial advisor because it's trusted, right? You would trust the advisor. They're not advisor. They're glorified salespeople. Sorry to break it down to you, and my apologies if I offended any people out there, but it's the truth. They're there to sell you into the funds. Of course, most of them are good-hearted people. Hey, they have to make money as well, but they can only sell you for what the company that hired them and puts them out there has to offer. So there goes that. JP Morgan is shocked that young people who work from home are less productive. Interesting. JP Morgan was apparently surprised to discover that across its business lines, employees experienced a noticeable decline in productivity. The bank recently told its traders to report back to the office as the bank becomes the first Wall Street player to start recalling employees to the office, and it goes complete opposite to what the tech companies are doing, which are saying, hey, stay at home into the next year and year after that and so on. And the report, they have basically saying there's a report published by Bloomberg, and they share some key findings. And the report found that the workers showed a definite lack of creative energy while working from home. The bank had noticed the productivity decline among employees in general, not just younger employees, adding that younger workers could be disadvantaged by missed learning opportunities by not being in the office. And, if we kind of think about it and talk about it, there's going to be a piece that I don't know if it's, productivity that is down. But remember, he definitely say definite lack of creative energy. What that means is they're not as smart to manipulate stuff, and we're not all in the office. They can't see other people who are very experienced manipulators to go out there so that they can do the same thing, because we can't just feed people to death. We also got to cheat them out of their money ethically, sometimes legally, mostly unethically and illegally. But hey, it's not illegal unless you get caught. And even then, it's not illegal if you sign the document, pay a small fee. I know it's in millions, but to them, that's a very small fee. And then keep on going, cheating on your own customers. How and why JP Morgan even has any customers is beyond me. But I guess we all have to bank somewhere, right? Right? So if that is the case, well then, hey, you got to do what you got to do. But there are companies and there are resources that are coming in the alternative space called the crypto space. And those that understand it and have done research and have been educating themselves and have been learning are saying, wait a minute, I can forego all of this hot mess of manipulation, lies, cheating, stealing, immoral activity, and everything else, and I can go into the thing called cryptocurrencies, maybe Bitcoin. I don't know. Think about it. I know now you're thinking, if you're not a proponent of cryptocurrencies as big as I am, you're probably thinking to yourself, wait a minute, Nev, but crypto is used for money laundering. Sure, so are the banks, and so is the cash. You know, just like technology. Technology is used to help us and to hurt us at the same time. A chair that I'm sitting on right now, well, it could be a very comfortable place to rest, but it could also be used as a weapon if I throw it your way, right? So everything has dual purpose, and our entire world is center of duality. What Bitcoin does have is an ability to be censored, inability to be manipulated, inability to be, centralized and kind of pushed over and shoved around and all of those different pieces. And yeah, it's volatile. And no, should you invest? No, I'm not going to give you advice to invest. I am. I do believe in it. I do think that it has a very, very long-term gain stuff, right? Don't focus on the minutia noise thing kind of happening. I'm looking at it long term of where this thing is going, and looking at, the world imploding when it comes to the financial sector, and they're trying to come up with the new ways of everything that's going on. I look around it and I go, you know, in all honesty, crypto might be like the only thing that exists out there that can help us get out of this hot mess without, giant wars and revolutions and stuff, which it might be too late for that, looking at what's going on in the world around us, right? So I am not the only one out there thinking this thing. And here is a report that the SEC is reporting that MicroStrategy may increase its Bitcoin holdings. Now, MicroStrategy is world's largest intelligent company, and they actually have, purchased Bitcoin a little while ago. So the publicly traded company, billion-dollar software firm, announced that it has purchased 21,454 Bitcoin as part of its new capital allocation investment strategy. You likely have heard about it if you have been paying attention to Bitcoin stuff. Decisions to invest in Bitcoin was due to the macro factors affecting the current economic and business landscape. MicroStrategy believes that holding Bitcoin is the way to go. The board of directors decided to make Bitcoin the company's primary reserve asset. Hold on, time out, let's talk. So what does this basically mean? Well, typically companies, they have money, they have reserves, right? Just like you and I have savings account, right? You save for rainy days, and then you save a little bit for, planned purchases, and you save a little bit for investments, right? The capital to kind of keep growing your money and that kind of stuff. Well, businesses do the exact same thing, right? They have the reserves, and those reserves you can hold in different manners. Some companies hold it in cash. Some hold it in money markets. Some hold it in bonds. Some hold it in gold. And some hold it in Bitcoin. Now, there are companies that do a little bit of everything, right? And kind of have this entire portfolio. Same thing goes for the home offices, right? Where families that have substantial wealth have their home offices, and that's kind of how they also do with continuing to grow and preserve their wealth. And so, if we follow what they do, well, wouldn't it make sense for you and I individually, not just part of the business, but individually, to do that kind of stuff? I would say yes. I would say it absolutely makes sense to go out there and do that stuff. Where you go in and you have a little bit of money in cash, because that's the stuff they kind of have to spend. And maybe you have a little bit of money in gold, because you never know how things are going to go. And it has, well, centuries old history of how it performs. But then Bitcoin does have very strong points. And if you don't know or understand what it is, how it all works, and you want to learn more about crypto, I do offer an absolutely free course, not paid, free, 100% free, only on onedealaway.com. And speaking of onedealaway.com, they're actually sponsor for all of these events, including lack of commercials, because I don't know if you've noticed or not, YouTube used to be very, very cool, where you could watch all of these shows and videos and stuff. And now, every 5 minutes, every 2 minutes, you get interrupted and you get all these crazy commercials. Well, I decided not to do that stuff, because we want to make sure that you get entire content absolutely free, delivered to you without any commercials. All I ask in return, smash the like button, subscribe, hit the bell button, and tell others about it. Let's grow this community, and let's really get the learning on without all of these crazy commercials and interruptions, because you get into the stream of it and then they just cut it in the middle of the sentence. You're like, what just happened? Like, oh, come on, go away. And then you try to like skip it, right? Have you ever done that? You try to skip it, and then it's like processing. Then you got to start from the beginning. I mean, don't even get me started. All right. So the company's holdings of Bitcoin may increase beyond the initial 250 million investment the company disclosed on August 11th. Bitcoin is dependable store of value and attractive investment asset with more long-term appreciation potential than potential cash. And so they are actually jumping into Bitcoin to hold their money. And that is very, very cool. I'm not saying you need to do it. I'm just saying that's what they're doing. They made an educated decision. And you know what? One thing to keep in mind, what are they? They're intelligence company, right? They're a software firm. So clearly they understand the technology that runs behind Bitcoin. And why is it that all of the smartest, the wealthiest, the people that are really big on tech and understand technology are all jumping in crypto and you are not? Because, well, you have not taken the red pill yet, and you don't see the little green things like in the Matrix come down, right? You are still thinking that what you're watching on CNBC and on Fox and on that kind of stuff, that stocks are the only way to go. There might be a way to go, but it's not the only way to go. And stocks, in my humble opinion, are way too manipulated. And it's kind of nice to go out there, but it really feels like going into the casino, doing a little bit of gambling, and who knows? You might come up good, you might come out poor. You never know what that's going to do. For entertainment, sure, I guess. I don't know. But when it comes to our wealth, growing and preserving it, I don't know how I feel about that, and especially not now with crazy stuff happening when we're seeing all of the things with liquidity and everything else. Now, one thing that I do want to mention for everybody that is watching this is to pay attention that, Bitcoin has been correlated with stocks quite a bit, especially, on the short-term kind of down thing. So if the stocks kind of go down, I do expect that Bitcoin is also going to take a hit, and with it, Ethereum and all of the other altcoins, right? So I do believe that that could come, but long-term perspective stuff, I do see Bitcoin being an incredible option where it could go not just 10x or 100x, it could go 1,000 or 10,000, even 100,000x return. Again, not a financial advice. Is it going to happen overnight? Absolutely not. We have a long way to go, and if you're going into something like crypto and Bitcoin and that kind of stuff, you got to invest for super, super, super long term. I'm saying 10 years plus, right? So you got to be in for a very, very long ride. You put it in, you DCA, and just let that puppy go. Let it go. Let it do its own thing. Is it guaranteed? No, nothing in life is guaranteed except, well, we're all going to perish from this planet sooner or later. None of us know when, and I kind of like it that way, actually, to be honest with you. In final piece that I wanted to share with you is Oracle came out of nowhere and has a partnership with TikTok. Wait, what? When did they step into the TikTok game? Well, apparently it happened, right? We've heard of Microsoft. We've heard Walmart jump into it. Wait, Walmart is getting into social media? Look, folks, everybody's getting into the tech. My question is, why are you not? I mean, I am. I am definitely going into the technology because I believe in it, as I believe in cryptocurrencies. Oracle publicly stated that it has in let's try this again now. Oracle publicly stated that it has indeed struck a deal with TikTok's parent company, ByteDance. Multinational company, a computer tech company, Oracle tech firm, had managed to nab the U.S. operations of TikTok, overtaking Microsoft's initial plan to make move on the trendy video sharing platform. Oracle, along with TikTok, still require U.S. government's approval before moving forward. While Microsoft has withdrawn its offer, Walmart still has been reported to be interested in investing in TikTok. The offer to offer more security, blockchain, hello, and you know Bitcoin is on blockchain, Bitcoin, yeah, connecting, okay, good, is a viable solution for TikTok. ByteDance has been reported to have been taking interest in blockchain as it had started investing in the decentralized ledger technology. If blockchain was implemented on TikTok, it could secure the data of millions of users and offer scalability solutions. Currently, regular approval is awaited from Trump administration for the Oracle ByteDance deal, and Congress is expected to reach a conclusion sometimes this week. I don't know, maybe, because if they move as quickly as they have been moving about, paycheck for you and I and everybody else unemployed, well, we're going to be waiting a very, very, very long time. All right, y'all. We're about to jump into the Q&A for everybody watching live. For those of you watching on YouTube or elsewhere, do me a huge favor. Tell others about it, share it, hit the like, hit the subscribe, hit the bell, get notified, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.